It's October 15th, and we have a federal government shutdown. We have an expired farm bill, and we have the ongoing tariff wars that most recently has picked up again now with China. And so a lot to talk about.
Welcome to Compeer's Ag Edge, brought to you by Compeer Financial. In each episode, we break down complex agricultural economics, policy dynamics, and farm business topics into conversations that make sense for your operation. We're here to help you stay informed and confident about the trends and decisions affecting your agricultural business. Today, we have an October DC policy update, and I am joined by Perry Aasness, Vice President of Legislative Affairs for Compeer Financial. We're going to start with an agricultural and macroeconomic update. So we're really going to dive into where the data is as of right now in mid-October. We have some data that is being affected by the shutdown. We have some data that is not being affected by the shutdown. And as we head into the end of October, the Fed is going to have to make another decision on where they're going to target their Fed rate. Because inflation continues to rise slowly, but at a relatively stable rate, the data point that the Fed has been more concerned about is job market weakness. And that has outweighed inflation in the eyes of the Fed for now. And that caused the Fed to drop the Fed rate 0.25% in September. But we've really got an eye now to the end of October and where they might go in the future. So let's review a little bit of those data points. What did the Fed do for monetary policy at their September 16th and 17th meeting? They made that one cut that I just mentioned, which is the equivalent of 0.25% or 25 basis points. And that brings us to a new Fed funds target rate of 4 to 4.25. They also did something related to their quantitative tightening. Quantitative tightening means they're reducing the size of the federal balance sheet, but they're doing that at a slower pace than in the past. So if we look forward to what might happen at the last two Federal Open Market Committee meetings in 2025, we can look to the Fed's economic projections to get some additional insight. The Fed puts their projections for the future Fed funds rate on something called a dot plot. It's called a dot plot because every single Fed Open Market Committee member that is providing their projections is represented by a dot. And so it looks like a bunch of dots on a graph. And if we look at the average of what the consensus was, it does look like 2 more rate cuts could be possible as we move into the end of 2025. And that would likely mean 1 cut at each one of the remaining 2 meetings. We also got a little bit of insight on where the Fed is thinking that some of those key macroeconomic data points like unemployment, GDP, and inflation might go. So unemployment in these projections is shown to peak lower on average. Inflation is shown to peak higher, and that GDP is predicted to be slightly higher as well, meaning a little bit more growth, which would increase that inflation. But because they're cutting rates, they're hoping that unemployment won't go as high because they're getting a handle on the labor market situation before it would deteriorate further. That's the goal, at least. The summary is, if you combine jobs weakness with persistently high but relatively stable inflation, the recipe is for slightly more moderate policy in terms of the federal funds target, and that's where those 1 to 2 cuts could happen. These are forecasts. Sometimes reality doesn't match forecasts. When we look at what's happening with then interest rates, because the effective Fed funds rate does correlate with interest rates, but it is not a 1-to-1 match. We can look at something like a stand-in for average rates, like the average 30-year consumer mortgage nationwide. We're at 6.3% right now. And so it's tracking with the Fed funds rate right now. If we go back a year and we look at where we were a year ago. So a year ago, the Fed took their target down 1% over the course of 3 meetings, and interest rates went up by 1%. We got a little bit of an opposite thing happening. They're tracking together, and that's generally more of what we would hope to see, is that when the Fed funds target goes down, we also see interest rates going down. Didn't happen last year at this time. It is, as of right now, happening in a correlated fashion. Okay, let's start transitioning over into a little bit more of the DC policy update, and where that overlaps with macroeconomic data is that we are starting to see some delays in the reporting that economists and the Federal Reserve would use for their decision making. So the latest information we have on GDP came out at the end of September. So we haven't missed a report there from the Bureau of Economic Analysis. In that report, we had GDP at 3.8%, which is a relatively healthy rate. Our job situation report, which comes out of the Bureau of Labor Statistics, the latest information we have is from August, and we have missed a report there. So we're missing our October data, and we have to look backwards then at August data, which showed just a little bit of that uptick in unemployment at 4.3%, and a little bit of a challenge on the jobs growth side. The 22,000 job growth in a month is lower than what the Fed would be looking to see. And they use that as one of the reasons that they made the adjustment in September. So we're missing this data. For inflation, we have August data as well, but that is actually the most up to date because it came out right at the end of September. It is likely that we will miss the end of October inflation data report, though. So at that point, at the end of September, we're at 2.7%, which is considered elevated, but it's elevated in a relatively stable way. It's not shooting up very fast or reducing very quickly either. Just sort of a steady uptick. One type of inflation report that we did miss was a consumer price index report that was just missed this week, but those economists are back on the job right now, and they were called back in to start calculating that report. So we know it is coming before the end of October. It's just going to be delayed. And that's an important report, less so for the Federal Reserve, but more so for things like cost of living adjustments. And so that is why that inflation report should be coming soon. Last economic data point here that we are missing would be our world agricultural supply and demand estimates. So the latest data on official USDA forecast prices, we did miss an October report. If we look back at that September report, the season average farm price remains for corn at what was posted in September. So that was $3.90 per bushel. And for soybeans was $10 per bushel. And that WSDA report may or may not come in the future. We have had government shutdowns where the WSDA was missed, and then later on, we got some of that information in a future month. And we just don't know at this moment exactly what will happen. But I hope that's a good transition to say that Perry might be able to share a little bit more insight on what may or may not happen as we move through this October with a lot of news coming out of DC.
Thank you, Megan, and good afternoon, everyone. Yes, I think everyone is aware there's a lot of uncertainty coming out from Washington, D.C. It's October 15th, and we have a federal government shutdown. We have an expired farm bill, and we have the ongoing tariff wars that most recently has picked up again now with China. And so a lot to talk about, maybe more questions than answers at this point, but certainly of top of mind right now is the federal government shutdown. And so as of today, we're entering the third week of the federal government shutdown. A little bit of background, probably most folks know this, but the federal fiscal year starts October 1st, ends through September 30th. And traditionally, Congress back in the day was able to get annual appropriation bills that would pass, get conferred between the House and Senate, signed by the president in time for the beginning of the fiscal year. That's really become the exception rather than the norm. We tend to be in this position of passing continuing resolutions, which basically temporarily fund the federal government after October 1st. Usually this is for a period of time to allow Congress to continue to negotiate a budget agreement. Where we're at today is the fact that back on September 19th, the House Republicans passed what's called a clean continuing resolution, meaning it was just basically primarily a bill to keep the government funding until November 21st. And that was sent over to the Senate. And this is where it gets interesting. The House is trying to, and the Senate Republicans are trying to get a continuing resolution passed temporarily. The Senate and House Democrats have looked at this as an opportunity to leverage the fact that the Senate needs 60 votes to pass legislation or to cut off debate through the cloture rule. And so the Democrats have used this as an opportunity to say, we want some things in this in return for our support, things such as dealing with the expiring Obamacare tax credits and perhaps addressing some of the Medicaid funding that was included, the cuts included in the One Big Beautiful Bill. And so oftentimes, most cases, these clean CRs are just passed, and then there's a few weeks for the House and Senate to negotiate. But at this point, we're really at a standoff. The Republicans are dug in saying that we just need to get a bill to pass the federal government to keep everything going. And again, the Democrats are looking at this as their leverage, being the minority in both the House and Senate, to try to extract something for that. And so at this point, Republicans are saying, let's pass a clean continuing resolution, and then we'll talk. Democrats are saying, we want some things as a condition for supporting, particularly on the Senate side. So we really are at a standoff right now. This is not absolutely unusual. We've had situations in the past where we've had shutdowns, but when you look at where the sides are at the moment, both sides are pretty dug in. But just going back historically, back in the first Trump administration, there was a shutdown for 35 days. Back in the mid-90s in the Clinton administration, there was a shutdown for 21 days. And then back in the Obama administration, there was a 16-day shutdown. So while these are not unique, just given the narrow majorities in Congress, given the polarization in Congress, and given where the sides are at this point, there doesn't really seem to be an end to this at this point. The Senate yesterday tried for the 8th time to pass a clean CR. That failed. And so we're kind of back to the point where I'm not sure when the next vote is going to occur. The Senate actually may be looking at bringing up a defense appropriations bill tomorrow, Senate Majority Leader John Thune. But in terms of shutdown talks, it appears that we're at a standstill. And obviously, as this goes on, the implications for that will become more and more apparent over time. The other issue is that, again, being in October 15th, there's a lot yet to do that Congress was planning on doing and not much time to do it. Besides just getting a budget bill passed, and keep in mind this November 21st continuing resolution was not to finalize a federal budget necessarily, but to give time to finalize a budget. So they still need to get a budget bill passed, not by this year. It probably will likely have to go into early next year. But there's other pieces of legislation, the National Defense Authorization Act, Highway Bill, and Farm Bill, which we'll talk about in a moment because that's of importance to Compeer and agriculture and our clients. And so when you look at the number of days left and you factor in the holidays, we're really running into a crunch time to get things done. And probably more importantly, and the challenge right now is where can we find that degree of bipartisanship to get some things done, recognizing that, the sides are very far apart at this point. So, and then just to speak to that point, just a reminder again, the House is controlled by Republicans. They have a narrow, frankly, a historic narrow majority. It takes 218 votes to be in the majority in the House. Republicans have 219. Democrats have 214, 2 vacancies, although one of those, as a result of a special election in Arizona, will be seated sometime soon. But in essence, Speaker Johnson, although he is the Speaker and has the majority, really can only afford to lose one or two of his colleagues on any particular vote. So a very narrow majority there. And then, as I mentioned, on the Senate side, the Republicans have a 6-seat majority, 53 to 47. But because of the cloture rule in the Senate, which requires 60 votes to cut off debate, to agree to take up pieces of legislation, that does give Senate Democrats a lot of leverage. And this is where they're using that leverage as relates to the shutdown and trying to extract some concessions from Republicans. So that's where we are right now. I'd like to say that we can see some movement here at this point. You never know. This thing could get resolved very quickly, but it appears, as I mentioned a moment ago, both sides are dug in, and it's hard to see an end date to this at the moment. So, Megan, talk a little bit about this. What are the impacts to agriculture? I'll focus more on USDA for a moment. What remains open at USDA are the inspection services that go on at the border, both import and export inspections for meat, egg, grain, other commodities. What is closed at USDA, and this has significant implications for farmers, is the fact that the local Farm Service Agency offices are closed, meaning that payments for CRP program payments, ARC, PLC, things like that, signing up for a new loan from USDA, a direct or guaranteed operating or ownership loan, or even going out and getting a commodity loan, CCC loan, all that stuff cannot occur right now because the local FSA offices are closed. With one exception, there is some allowance to allow one employee at each office to go in, I think, a couple days a week to try to process, maybe it's checks come in, whatever, or loan payments and things like that. They can go in and deal with loans that are in the process of getting approved, but no new loans, nothing like that is occurring at the moment. And then beyond that, USDA Rural Development is closed, so grants and loans that come through that agency can't be processed. Crop insurance is not affected, but the agency that regulates the crop insurance sector, Risk Management Agency, their activities are limited. And then, as noted a moment ago by Megan, some of the important reports that come out from USDA, the NASS reports, Economic Research Service reports, and probably most importantly right now are the WSDA Global Supply and Demand reports that the market relies on. Those are not available right now. So we're kind of operating in the dark. And again, as this shutdown goes on longer, the implications and the impacts of that will be only felt stronger going on over time. So I'm going to transition a little bit. This is a little bit of going back to one thing that Congress did get done this year. Back in July, Congress did pass what was called the One Big Beautiful Bill Act, which is basically the reconciliation bill that actually did include a significant amount of funding for the Farm Bill safety net, or I guess the better term would be modernize the Farm Bill safety net. About 85% of Farm Bill spending, or 80% thereabouts, was included in the reconciliation bill. And not to go too in the weeds on that, but the reconciliation bill can only deal with spending related items. So a lot of the policy things that would typically come in a farm bill, a lot of the authorizations for new authorities and things like that could not be included. They simply weren't eligible for inclusion. And so while Congress did include a lot of new farm bill spending, there's a lot of other things as part of a farm bill I'll talk about in a moment that have yet to be addressed. And we do have a farm bill that has expired at the moment. So, but real quickly, what was included in there was increase in reference prices for ARC PLC, increase in payment limits, increase in marketing loan rates, some provisions in there for crop insurance to increase the subsidy and coverage level for the supplemental coverage option, increase in subsidy premiums for individual multi-peril crop insurance policies, updates to production history for the dairy margin coverage program, the DMC. One interesting thing is there's a one-time allowance to update base acres. There's about up to 30 million acres that could be updated that maybe aren't eligible for farm program payments right now because they weren't eligible because they weren't considered base acres at one point in time. So that is in effect there as well. And then finally, some increased funding for trade promotion programs. And so the good thing is that some of the commodity title programs were included in the One Big Beautiful Bill, but obviously there's a lot beyond that we're seeing in terms of challenges with the farm economy and probably a need for some additional assistance from Congress and the administration going forward. But that did go into effect. And the one thing about the ARC and PLC in reference price increases, though, they don't become effective until they don't get paid, I guess, at those new rates until a year from this time, September 2026. So farmers won't be feeling the effect or the impact of that until then. So then shifting gears, you had asked me a few weeks ago what we'd be focused on, and what we still are focused on in many respects is getting a farm bill across the finish line, a true farm bill, one that includes all titles. There's typically 12 titles in the farm bill. The current farm bill, as I mentioned a moment ago, expired September 30th. What that means at the moment is very little. There's minimal impact on that, but as we get into later this year, as we get into the end of the year, Congress is going to have to do something to either extend the current farm bill again, which has been already extended twice, or hopefully try to get a Farm Bill 2.0, skinny farm bill. It's been referred to by a couple of different ways, get something passed. But again, as I mentioned a moment ago, as we look at the congressional calendar, as we look at the fact that we're in a government shutdown, the prospects of that seem to be diminishing by the day. But there are a lot of titles, as I mentioned, that a lot of issues that were not eligible for reconciliation that could not be included in the one big beautiful reconciliation bill: research, energy, rural development, credit title, which is obviously important to farmers and to lenders like Compeer, in terms of seeing if we can do some things to get the loan limits increased for direct and guaranteed operating loans. So there's a lot of things in there that we'd like to see Congress address. And there's a number of other policy issues and authorization issues that Congress needs to address related to specialty crops, organic, local foods, horticulture, things like that. The Prop 12 issue, there's been hope that, particularly from the pork sector, that Congress could put something in place that would prevent state-by-state restrictions on production standards for products that enter their states. And so a lot of reasons to get a skinny farm bill done. Without that, and this is kind of that threat that comes this time of year after farm bills expire, actually, ag policy revert back to farm policy from the 1930s and 1940s, something called permanent law. And without getting into the details today, that would not be good, I would say, for agriculture, obviously not relevant at this point in time. And so, again, given the fact that we're in a government shutdown here, it's hard to see right now when we can get to talking about a farm bill. If I have any encouragement to share today, it's that, all four corners of the Agriculture Committee, that meaning the chair in the Senate, John Bozeman from Arkansas, G.T. Thompson from Pennsylvania, the ranking members in the Senate, Amy Klobuchar, in the House, Angie Craig, all have indicated publicly that it would be their desire to get a skinny farm bill passed. I think they all understand the need. Again, once we get through a shutdown, it would be the hope that they could begin moving on this. Similar to last year, if you recall last year, the House moved first. G.T. Thompson actually got a bill marked up and passed out of his committee with some bipartisan support. We would expect that sort of process to go on again once we get through the shutdown. But at the end of the day, and I think we all recognize that farm bills historically have been passed with bipartisan support. It would take that in both the House and the Senate. Whether we like it or not, there are some detractors on both sides of the aisle for farm bills. And so assuming that G.T. Thompson could get a bill out of his committee, it's going to take bipartisan support on the floor. Same in the Senate, as I mentioned a moment ago, it takes 60 votes to move legislation, and that would be the case here with a farm bill. And so thinking about what Democrats will need, they will want something for their support in this farm bill. And of course, that would be worked out once we get bills introduced, get them marked out of committee and things like that. So absent getting this done this year, you'd expect some sort of a short-term extension, hopefully not for another year, because I think everyone realizes that the current farm bill that we're operating under, which was originally passed in 2018, a lot has changed in the world of agriculture since then, and it needs to be updated, needs to be modernized. One piece of this that we're working hard on at Compeer, though, I wanted just to share beyond just the funding aspect of a farm bill and the authorities and the policy changes. This is one of them. We certainly see, and I think a lot of our clients and many in agriculture see the gap in the ability to have what are called essential rural community facilities across rural America. By that, I mean things such as rural hospitals, senior living, daycare, fire stations, things like that. There is a significant gap that is not currently being met by the federal government, by traditional banking. Compeer has had some authority to finance, particularly rural hospitals and senior living in this space, but there's a significant gap of at least $6 billion. And quite honestly, I think that number has only increased, probably closer to $9 billion at this time, that is currently not being addressed. And so we see the farm bill, the skinny farm bill or Farm Bill 2.0, as an opportunity to get the authorities in place to provide farm credit to work on financing these facilities in collaboration with local community banks. A piece of legislation called the Investing in Rural America Act has been introduced. I was included in G.T. Thompson's House Farm Bill last year. We're hoping that this language could get included as well, just to allow farm credit to work with local bank partners and help, and others for that matter, help make a difference in bringing that capital back to support rural communities for the benefit of rural residents, farmers, etc. So we're encouraged. We've got bipartisan support for that. But again, this is one of those many issues that need to be part of a Farm Bill 2.0 when Congress can get to it. But, there's certainly a lot of economic challenges right now in agriculture. The trade, the tariff issues have had a big part of that. I will just say this, that certainly the economic conditions currently facing agriculture have clearly got the attention of the White House and of Congress. We're seeing already that the issue with China, which has become more and more challenging over the last few months to the point that they've stopped purchasing U.S. soybeans. There's been some hope that there might be some thaw in relations. And then last week, of course, China announced that they were going to be tightening export controls on rare earth materials coming from China beginning December 1st. That prompted President Trump to announce he was going to impose 100% tariffs on Chinese exports beginning November 1st. Suddenly things have gotten real tense there again. And all of this is coming just prior to what was expected to be a meeting between President Trump, Chinese President Xi in South Korea later this month. And so those of you that are farmers that are listening today, you understand the commodity price outlook. That certainly is starting to resonate with Congress and with the administration. And while we don't know all the details, I guess I wanted to close with a little bit of a crystal ball in terms of how this might play out. It does appear that from the administration standpoint, the Office of Management and Budget last week signed off on moving $13 billion to the Office of the Secretary at USDA to develop some sort of a tariff assistance package. We don't have the details on that yet. And Secretary Rollins announced that they were not going to be announcing the details of that program until the government shutdown ends, which to some extent makes a lot of sense given, as I mentioned a moment ago, FSA offices are closed at the moment. So even if there was some sort of assistance package, you've got to have those offices open to provide that assistance. The other idea that's being talked about is utilizing tariff revenue for some ag assistance through something called Section 32, which basically refers to funds that are derived from custom duties that are appropriated to USDA that could potentially be used. There are some limits on that. There's some question in terms of whether the administration could do that unilaterally or whether it would take congressional action. It appears at this point it would probably take some congressional action, which again, with the government shutdown, I don't see this happening anytime soon. But the other nuance to all this, of course, is that the issue of the president's authority in terms of imposing tariffs is being challenged. The lower court threw them out. It's been appealed by the administration to the Supreme Court to hear that tariff case, that tariff authority case. The Supreme Court is expected to hear oral arguments on that November 5th. That could throw a wrench in all this as well. But it would appear at this point that the administration will try to offer one tranche or one phase, if you will. And then again, depending on this outcome of the tariff authority and depending on the utilization of Section 32, there may be a way with congressional approval for Congress to step in probably at the end of the year at the earliest with some additional assistance. I guess what some would call bridge assistance. Farmers have been used to now the last few years getting a lot of assistance, and you talk to any farmer, they'd rather get it from the marketplace. But we are where we are right now with the situation with tariffs and the lack of a lot of new trade agreements. And so I guess I'll just close with this. I think assistance is coming. We don't know yet in what form or fashion. It'll likely be, though, in two different tranches. And we'll look for that with the hope that Congress reopens, gets a budget agreement passed, reopens the federal government, and we can begin working on these sort of issues as well as a farm bill and go forward into next year. We always say we're just 1 year away from the next election, and we are getting close to 2026, and that will be the midterm elections. As I mentioned before, we have very narrow majorities in both the House and Senate, so it would be great to get much of this going and out the door, at least by early 2026 before we get into the political season. So with that, Megan, I guess I will stop there and see what questions we might have.
Yeah, we've got a few questions that have come in. And so let's start maybe with the first question here, which has to do with the continuing resolution that hasn't been passed yet. The question is, the CR only goes to November 21st, so won't we have another shutdown then? Should the CR go longer than November 21st? This seems like much to do about nothing, since it only extends the budget a very short time.
Yeah, that's a great point and a great question. So again, think back, the House passed their clean CR October 19th. And I'm sure at the time thinking November 21st, roughly 2 months, would give Congress time to hopefully reach a budget agreement.
September 19th.
Yes, apologies, September 19th, yeah. So roughly 2 months. But as this goes on, obviously, it seems rather silly to come together right now to agree to pass a CR only till November 21st and have the same issue again. So I would expect that if and when, it'll have to happen eventually, that Congress reaches some agreement on a CR, they would probably look at moving that date out a ways to give them a little extra time to get a budget negotiations, get a budget resolution passed. So as every day, as we get closer and closer to that date, it does seem like that will have to be moved. And again, to the question, it's like what we're talking about here is the CR does not establish a budget for next year. It just simply gives Congress time to work on one. So they got a lot more work to do to get a budget passed is the short answer.
A question that you did address earlier, but just wanted to maybe review it a little bit more. Can you talk a bit about the difference in how the One Big Beautiful Bill Act went through as reconciliation and how that 50-50 vote in the Senate was able to move it on versus the 60 needed at this point, and really the stumbling block as to why the CR was not passed?
Yeah, that's a great question. And I didn't really clarify that earlier. So the one advantage of budget reconciliation, when it is used, is typically when one party controls the White House and the House and the Senate, because the one thing that the rules surrounding budget reconciliation allow is that 60 vote threshold that we talked about earlier doesn't apply for budget reconciliation. It just requires a simple majority. So that's the reason that back in July, the Senate was able to pass with a one vote majority, and the House was able to pass a reconciliation bill, and the 60 vote requirement didn't apply. So that's how they were able to get that done. And if you think back to the time, kind of looking at the economic clouds for agriculture, the Republicans felt, I believe, that let's get some modernization to the Title I farm program safety nets that would be helpful. They also looked at the fact that this was a way for them to deal with some of the continued growth in the supplemental nutrition program, the SNAP program. And so about 85% or so of the Farm Bill spending, if you will, was included in budget reconciliation. But that's how and why they were able to use reconciliation to do this, and how they were able to overcome, that issue of the leverage that the minority has with normal legislation, such as a continuing resolution.
So that portion of Title I, which is going to be ARC and PLC, ag risk coverage, price loss coverage, I think it's really important and key to the conversation that you had in your last slide, that is for 2025 programs, but you've always got that delay out to that next September, October for it to be finalized. And so that's really a 2026 money in your pocket sort of thing. Right now, we've got not only the fact that if the government were open, ARC and PLC payments would be based on One Big Beautiful Bill Act. And we've got, of course, the issue that FSA is under a lapse of funding right now. So that's where the conversation about the Market Facilitation Program 2.0. So do we have any more information other than what you've shared on the quote unquote MFP 2.0 possibility? And should, when it comes to ad hoc programs, we have any assurance that might be coming until it is actually in writing? That's a leading question there, Perry, that I gave you a leading question on purpose, maybe.
No, that's fine. As I mentioned, it's clear that all the way up to the White House and with congressional leadership, they have heard very loud and clear from the countryside the economic challenges facing farmers right now. And so the fact that last week OMB, Office of Management and Budget, for them to authorize, if you will, a release of about $13 billion to the Office of the Secretary, I think gives us good indication that they understand the urgency of this, and they understand that this tariff war that we seem to be in, farmers are going to need some sort of a bridge. And so you mentioned, the market facilitation payment program back in the first Trump administration. Might it look like that? It's hard to say. It appeared that particularly the second round of that worked pretty well. If I recall, I would assume something might be in the works like that. I would assume that they're going to make this a fairly uncomplicated sort of program to get those dollars in the hands of producers as quick as possible. But I think we can also assume that even though $13 billion or $12 billion, whenever that number is a lot of money, and it is, there's probably going to be a need for more here going forward, just given where we are from an economic standpoint. And that's where this idea of how to utilize some of these Section 32 dollars to supplement that, if you will, is going to be the next item I think that will be looked at that will likely take some congressional involvement.
Yeah, all of these numbers, very large. But when you do go back to the 2018, 2019, 2020 timeframe when MFP round one, and there was a phase two of that one program as well, was issued, the first round was $8.6 billion. Second round was $14.4 billion. It ended up totaling over $23 billion. So a lot of dollars moved through market facilitation program. So when we hear something like 12 to 13 right now, it does sound like a lot, but certainly the historical program was quite a bit of dollars as well. But we just don't know what it's going to look like until it actually happens and is in writing. Shifting gears a little bit, still talking about USDA programs here, but on the conservation side, regarding the new farm bill, an attendee asked, do we see potential negative impacts to the CRP program?
Well, I think what we're seeing, to me, the short answer is I don't see the CRP program going away. What we hear from policymakers a lot, and I think from a lot of the farm groups, is let's focus on the quality of the acres and not the quantity. So I'm not hearing of anything about reducing the numbers, but I think there's clearly a focus. Let's make sure that we're setting aside the truly marginal lands that probably shouldn't be farmed, and then making sure that productive farmland is available for existing farmers, for new and beginning farmers and things like that. So I don't see it going away. It may be more fine-tuned and more focused on making sure we get the lands that truly need to be in conservation to be in, and the rest of the land put into production.
But perhaps a little bit of a wait and see exactly where that goes on the Conservation Reserve Program throughout the negotiations when they happen.
Yep.
Another question here, this one might be aimed more at me, but I'm going to see if you answer it first, and that can give me time to think of an answer. If you were sitting in a farmer seat right now, which Perry and I both farm, so maybe we should put on our farmer hats for the moment. What's the one economic trend you'd be watching most closely going into 2026?
Well, I'll start by answering this, Megan, but farmers are no different than most people. We like certainty, right? And I think the one thing that has created the most uncertainty is what's going on in terms of our trade situation and the tariffs. I think there's an understanding that free trade is not always fair trade. And there's probably some logic to sit down with countries and maybe tariffs. This president wants to use tariffs as a negotiating tool. I guess if that gets us to a better outcome, that would be great. But at the end of the day, we've got to find markets for the crops and the livestock that we produce here in the country. And so whether that comes through in enforcing existing trade agreements, hopefully negotiating new trade agreements, but also looking at ways to encourage new markets on the domestic side. The one thing I didn't mention, but I think Congress is looking at what could be done, things such as year-round E15, which tried to get passed a year ago or so, for example. What can be done for, emerging technology for renewable fuels and things like that. So I think right now that's a great question. I think we need to get through this current economic downturn. Hopefully there's some light at the end of the day. We get some more stability to our export markets, but I think we're also going to need to be looking at new uses for the crops and the livestock products that we grow.
Well, I'm right there with you, Perry. I think that's very similar to the answer that I would give. There is a lot of uncertainty on the trade side. That is certainly a concern that I have, whether I'm thinking about my own farm or whether I'm thinking about Compeer clients. But there is a caveat there, which is it really matters what type of commodity you're producing, or if you're not producing a commodity at all. If you're in production of non-row crops right now, your economic concerns are probably very different than a corn and soybean farmer. And on that corn and soybean side, certainly that tariff uncertainty is very challenging, probably most so on the soybean side as we look out into a time frame right now where we typically would have, for instance, quite a lot of committed sales to China for our soybean exports. In a general year, typically 1 in 4 soybeans in the U.S. is going to end up as an export to China. And at this point, we don't have those commitments right now. So that's an uncertainty that has me a bit worried, and it might impact the way that I am thinking about the 2026 season and where prices might be. But that situation might be very different if my number one production was not corn or soybeans, if it was, say, a livestock product or a fruit or vegetable, that sort of thing. Definitely different concerns on that side. Let's see. Okay. A more particular question, and you can choose how to answer this, Perry, but is the amount of funding for affordable care being lobbied for by the Democrats now close to what was cut out by the One Big Beautiful Bill Act?
Yeah, I'm not sure what the exact number is, but the issue that they are saying is that we're getting into enrollment season for health care plans. There's been some talk about, and as I mentioned a moment ago, I think what I'm seeing and reading from both sides of the aisle, there's an acknowledgement that this is probably something that needs to be addressed in some form or fashion. I'm not privy to those details, but I think the position right now as we get back to the continuing resolution on the Republican side is we're happy to talk about this, but let's get the government reopened first. And I think that's where their position is. I suppose that they're thinking as well that, if they negotiate something on this and then we've got the next CR deadline on November 21st, then you get down to, well, what's the next thing? So, but I think healthcare affordability is a big issue. So it's the Obamacare tax credits. But beyond that, I don't know what exactly in terms of a proposal could be worked out. But I just don't see that happening at this point until we could get past getting a clean CR passed.
What are you thinking about in terms of, hopefully at some point the shutdown will end and we will be back to business in DC. As you're thinking about a time post shutdown, do you want to just recap what your top things that you're thinking about right now are?
Yeah, great way to end. So we, Compeer Farm Credit System, and I think most of agriculture have been advocating Congress to get this Farm Bill 2.0 passed. I kind of covered that over very quickly, but we need to get something done on that. And so the Farm Credit System has a fly-in to DC coming up the first week of November. I'm hoping that by then there's actually, elected officials in town. They're not in recess like they are, at least in the House at this point in time. But we are going to continue to talk about, the need to get a farm bill passed, that there's a lot of things in there that are important to agriculture and rural communities. We have a lot of priorities. I mentioned one, but another one would be increasing the loan limits for FSA loan programs as we see rising costs and things like that. And so a lot of reason to get a farm bill passed. Beyond that, we're certainly monitoring the current economic conditions. And as I mentioned, it appears that there's going to be an effort to get some economic assistance out the door to agriculture. And that would certainly be one of our messages as well, too. So, and then finally, we want to see this certainty. We hope that we get to the point that we get beyond the current situation we are and get to the point where we are opening up new markets. But definitely our message to Congress has been all summer, all spring, I guess, frankly, for the last 2 years. Let's get a farm bill passed. It's not going to solve all the problems, but certainly getting that in place, modernizing it is a key part of what we believe is important for agriculture and rural communities. And we'll continue to advocate for that as we go out to Washington and meet with elected officials and staff.
Yeah, absolutely. It's a step to have something passed in the One Big Beautiful Bill Act, but of course that's just funding related. And so on the policy side, definitely a lot left to go, and it's many years past, not just one extension, not just two extensions of the last farm bill. So I think that is, in not seeing any additional questions, a really great way to end because it summarizes a lot of what we've chatted about today. I know I learned some things. I hope everyone here as well learned some things about both the shutdown and then what to expect, hopefully post shutdown, as we move through the end of 2025 and into 2026. And with that, we will end for the day. Thank you so much for joining us. And thank you to Perry for sharing his expertise and wisdom. Thank you for listening to Compeer's Ag Edge. You can follow us on Apple Podcasts, Spotify, or your favorite podcast app. For more agricultural finance insights and resources, visit compeer.com. That's COMPEER.com. Until next time.